Okay, and we're live. Welcome to the Loose Ventures channel. I have some friends with me here. Say hello, friends.
Hello.
Hello. How's everybody doing?
Hey, pretty bloody this week.
Yeah? Hey, let's unmute some people here in Discord so y'all can talk. All right. Yeah, markets are hurting. Sad it's your day off, isn't it?
Yes, sir.
How do you feel?
I feel pretty damn good, and I can't wait to take the next 10 days off as well.
Why, because of the markets or just because?
Oh, no. I'll be active in the markets. I just won't be active at working
Oh, I see.
for a living.
Okay. Well, I guess to those who don't know what the hell's going on, because everybody here in the Discord, everybody knows what's going on, but everybody else that's going to be watching this video later, this is a Loose Ventures live stream. Check out the other videos that I have posted about the purpose of this stream. Check out the disclaimer, of course, and yeah, for those who haven't, this is just going to be a live stream of maybe a little bit of trading, a little bit of live trading, maybe some after hours research, and we'll be talking mostly value investing and maybe some options trading a little bit. So, yes.
I got a question, Luce.
Okay.
You going live video on YouTube? That's correct?
Yeah, and I did not know YouTube wouldn't let you live stream immediately, even though my channel's been set up for a couple weeks. It's
You're
odd.
going to share your screen on Discord.
Yeah, you can see this right now, right?
Okay. Hold on, my phone dead. Yes, sir.
All right, cool. Okay. Let's see. Why don't we bring up a flex chart here? Might be a little small, but I think that's okay. All right, let's do that. Okay, what are y'all trading? I'm trading a lot. I closed my Adobe trade.
Puts?
No, it was a short strangle. I was going for a little bit of theta, and I got what I wanted. Made about 67%.
Nice.
Yeah. Let's see. I think I'm gonna trust everybody. I think everybody will play nice. Yeah, I'll just open up the speakers. Let's see. Okay, actually, everybody should be able to speak. Or maybe, let's try this. Permissions. Okay, everybody should be able to speak now. Unmute or whatever. I trust you. All right, so let's see what we got. Markets down. This is day 5, right? The markets are down?
Yeah. Pretty brutal.
My goodness.
Yeah, Luce, just watch your video, brother. It's absolutely great, mate. Absolutely great. I look forward to him coming forward.
Oh, thanks. Yeah, it was just a quick video, but just a little intro for those who have no idea who I am.
It's brilliant, mate. It's really good, really interesting, and well done for being a vet as well. You're a badass, mate. So, thanks for everything you're doing.
Oh, thanks, man. Thanks for your support.
No problem.
Let's see. Look at that already. We're already doing great. What's that?
The greatest janitor of all time.
Yes, janitor. That's what I am. Uh, AT&T. How's Adobe looking? Adobe, I like trading Adobe. They trade sideways, or they're range bound somewhat. Or I guess you could see channels and how they trade. So both on the way up and down. And then lately they've been, I guess, big range trading sideways. Do you prefer like daily charts like I have up now? I usually look at daily and then a long term. I had it up earlier. What do y'all prefer?
Yeah, this is good.
This is good. Okay, because I like to look at the long term charts. Any stock I look at, I'm basically focusing on just one rather than looking at a whole bunch. But I do have like a few others on the side, like a 2x2 grid, for example. But two of those squares are for one stock, one short term, one long term. That's typically how I look at stocks overall.
For me, it's usually depending on the expiry. So.
Let's see. Everybody should be able to speak. Yeah, I'm not sure what's going on if you're not. Let me see. Maybe I have to like reset everything. I think if you joined before I changed the settings, you won't be able to speak. But if you join afterwards, yeah, just leave and come back. You should be fine.
Can you hear me?
Oh, yes, we can.
Yes.
All right, I'm in.
And
Thanks, Bruce. Looking forward to it.
Yeah. So how the hell do I turn off the little sound notifications?
That you have to turn up the volume on your computer. That's not going to work for you, right?
No. The sounds when somebody comes in and leaves. I've done it before. I just have no idea how I did it. This is the experimental live stream launch. Someone knows. I don't remember how to do it. I know I've done it before.
Is it options somewhere?
Invites. No.
Overview. Luz, can you hear me?
Yeah, simple. What's going on?
Go to the name of the channel. 3 dots. Notifications. I think down there, like in the or on the. I also did that.
It's under notifications. Go down to sounds and click deafen.
Notifications. Deafen. I don't actually see that. Hang on. There must be a different menu.
The gear bottom. Click the gear.
The what?
Click your gear, your settings gear. Then go to notifications.
Yes.
And page down, and there's all your.
I see. I think
we found our new chief technology officer.
Yeah, I think deafen does something else, right? User leave, user moved, user join. I think that does it.
There you go.
Okay, we should be good. Somebody leave and come back real quick.
I'm on my phone.
Did somebody do it? if somebody did, then it's working.
I'm hearing beeps, but
all right. It doesn't bother me. All right, best stream ever. Okay, I think it's working.
Do I have to leave? Yeah, I'll leave.
Oh, who's that?
Not a big gay shit with his family.
Who is at the mall or something? You're messing up my stream, man. Whoever that was. That's all right. Moving on. Let's see.
All parts of the growing pains.
It's true. So what are y'all trading? What are y'all looking at? Is everybody losing money? Let's look at the SPY. SPY's down 0.9%. What else? Yeah, NASDAQ. Holy. Discover, what's going on? I just realized I was muted. Can y'all hear me?
Oh yeah, that's a little better now.
I was talking to myself for a solid 60 seconds there. Yeah. I was like, man, everybody just left or something. I don't know what's going on. I actually have no idea why I was muted. Did someone mute me? Somebody's trying to sabotage the stream.
Wasn't me.
All right. So what are you guys I don't know if this video is going up. What are you guys looking at? What are you trading?
Six
Okay.
panels up, right?
Yeah. Let's see.
Can we look at MPW?
MPW?
Mm-hmm.
Like that MPW?
1 moment.
Medical Properties Trust? Is that what you're talking about?
Yes, that's it.
Ew.
Is someone trading that?
I'm long on that one.
APW?
MPW. M as in Mary.
10-4.
Let's see. Oh, they got a dividend yield of 8%. What's going on with them?
Must be making money.
Let's find out. Let's see. Let me bring up a few things here. All right. MPW. Because I'm lazy. Let's go to ticker. I like to look at estimates first before I look at anything else. So they're growing. They look kind of small to mid cap, yeah. EBITDA margins very, very high. Operating income, free cash flow. So, well, they're a REIT, so you're going to look at them a little bit differently. You're not going to look at cash flow. And I don't think this site shows adjusted funds from operations. Yeah, of course. They got that locked. All right. Well, I'm not going to pay. Not right now. Let's look at financials. So, wait, why are you in them? Just curious.
So they're heavily invested into leasing out hospitals, and the contracts on the hospitals are like anywhere from 30 to 50 years. And so I feel like those leases create a great residual income, as well as the dividend is a great benefit. And the stock doesn't fluctuate too drastically, so holding it long is not high risk.
It's been quite the ride. Let's see. Let's look at the long term. So this is their chart. Yeah, so they've been. You said they don't fluctuate because they're moving a lot. Like this chart? Is this the one you're talking about?
It's really hard to see on my screen.
Let me.
Are they swinging in like $20 increments or?
Let's see. The high was $24 back in January. Now it's at $14.44. And then, if I zoom out a bit more, like at the 3-year weekly, yeah, it went down. It's almost at the COVID crash low. I mean, it's volatile. Make no mistake. But let's see. Let's look at financials. Revenue's growing, so that's good. They're estimated to continue to grow. Operating income's nice. I like to look at operating income history. And if I want to go out further, I'll use ROIC.ai. So let's see. And this, I usually just look at operating income just because I know I can look at the long term. So back to 2004. Okay, we can ignore the first several years probably. But since 2007 through the Great Recession, I'm seeing low 43%, high of 72. But it doesn't, I mean, it fluctuates, but it's not too bad. But I guess this is a REIT. And I'll admit, I don't look at REITs too often. But
they generally always get dividend payers.
Yeah, I mean, these stocks are typically, you get in for the fat dividend. You just want to make sure that the dividend's safe, I really do kind of see them as a bond alternative just because of how high the yields, or maybe like a high yield corporate bond, something like that. But, there are circumstances where companies are just knocking it out of the park. I know during the massive bull run, REITs were attractive, but they just weren't on everybody's list. Because, why were you going to get into a REIT when you could probably make 100% on some sexy tech stock, over 3 years, right?
Hey, Luce, do you use Hardy's website at all or no?
I've looked at it a couple times. I don't I guess I don't base trades off of it, but I might use it as a reference just to see like if a stock's squeezing, something like that.
If you punch MPW into that, I'd kind of like to get your thoughts on what it looks like on this site.
Yeah, give me 1 second, because I'm still hearing, I don't know about y'all, but I'm still hearing sounds. Let's see. You know what? Why don't I just disable all freaking sounds? How about that?
Nice.
Yeah, I'm just going to do that. This just makes it way easier. Okay. Let's see. Okay, so what is it? HardyRection.com, is that it?
No, options.Hardy Rection.
Options at, let's just type this, see.
I can link it to you if you need me to.
Is this it right here?
Yeah.
Okay. MPW. Well, I think a lot of people aren't going to understand this, so I guess I'll bring it up, but I won't walk through it. But I guess stock price seems low compared to Gamma Max, which is implying like a peak for the stock price, at which point the stock price might revert. But I mean, there it is. But yeah, like I said, I don't really base trades off of this. I know how it works, and if you've been making money off of this, congrats. But yes. But a stock like this, I'm sure. I mean, you got to be in it for the dividends. And really, if a stock like this is trading at a supposed peak or something like that, you got to take a step back and think, why am I in this stock in the first place? Or are you trading it for the short term, or are you in it for the long term and it's passive income?
Is that Floof?
What's that?
Is that Floof?
Floof? No, that's not my dog. I don't know whose dog that is.
I don't have one.
All right. I think I actually did mute myself earlier. I was trying to unmute someone. Yeah, this is hiding the metrics I want to see, but that's okay. Let's see. A lot of REITs will, I mean, they typically make a good amount of acquisitions, and that's typically how they grow. I mean, they have to. So, I don't know. I don't know much about this company. I really don't. I hadn't even heard of them, to be honest, but that's a pretty damn high yield. Let's see if anybody's buying. I assume they're U.S. based? Yes, they are.
Yes.
So nothing as of late, but it's pretty... Insider trading is pretty sparse. Let's see if we go back last 4 years. Okay. So they did have a hell of a drop during the COVID crash. One thing I like to see is like, okay, if the stock market crashed at some point in recent history being the last few years, did management take advantage of that? Did insiders take advantage of that? And that would show a lot of faith, a lot of confidence in their own business. And it's not like if it isn't there, then, you know, I'm not touching the stock. It's not like that. But if I see it, then I'm thinking, okay, maybe they're about to do the same thing. You know, if the price is at the same level that it was during something like a COVID crash or, you know, a deeper stock market crash. So nothing there for them. I mean, they did have good buying like throughout 2020. It looks like, yeah, millions of dollars by execs. What's that?
How old is the company?
Oh, let's see. What did ticker say?
So you got the full DFV set up there on your menu bars and all that?
Oh, like bookmarks and shortcuts? Yeah.
Mm-hmm. Yes,
Looks like, they formed in 2003, so they're young. Self-advised.
Almost 20 years?
Yeah. But I mean, you know, that's young.
Yeah.
For a company, yeah. Yeah, I don't know. I mean, if you trust the dividend and ticker, I want to just leave that open. Ticker has good estimates for them, and the estimates are based off of Bloomberg estimates, by the way. I mean, it's not high growth, but it's something. And I mean, they're in healthcare, hospital facilities. They don't really seem to have residential exposure whatsoever. So, yeah, I'm curious. Are insiders going to start taking advantage of this? Let's check the heat map on Whale Wisdom. Or not the heat map, but let's just see if anybody's buying. Medical properties. Okay. I like to go here and then sort by percentage of portfolio. And then I'm just going to look for like big name companies, funds that either everybody knows or maybe like a few that I recognize. I don't really see any that I follow. But let's see. I think you can see. So here it tells you the number of funds holding over time. It hasn't really changed, it looks like. Yeah, it hasn't really changed meaningfully, at least. Yeah, I don't see any of the like easy, you know, indicators like, okay, this is definitely interesting, but the 8% dividend is pretty wild. especially now that the stock price has fallen so much.
Thank you, Luce.
Yeah, sure. Sorry, I don't really look at REITs too much, to be honest. But I do kind of like imitating DFV's approach, where the thing that'll attract you to a stock would be, maybe most of the time, it's multiples, it's valuation, it's insider buying, stuff like that, and then I'll take a deeper look. And if I don't see anything that really sticks out to me, then I'm like, I'll find something else. Maybe I missed out on something, but I'm not worried. There are thousands of stocks to choose from. I'm sure I'll find something that's trading at a pretty good value. But let's check Open Insider. Let's see if there are any big purchases recently. Typically, I like to start sort of, I guess, like small, like focused. So I'll be very, very picky from the get-go, and then I'll kind of expand from there. So, say looking at insider buying, I'll look at specifically executive buying, because insider buying, that can be any big investor, right? And they could be getting in and out for any type of reasons. They still matter, but I think executive buying is probably more important. So I'll go to Open Insider, and then I'll go to the latest officer purchases. And as I said, I like to be strict. So maybe I do, I don't know, like, let's start 500K. Oh, that's in thousands.
Lewis, can I say a question?
Yeah, sure.
Are you going to record this? And can you post it to
This is
Discord, or you
being
can put
recorded.
it on YouTube?
This is already being recorded.
Perfect.
Yeah. And then whatever I'm saying right now, like, I'm probably going to do a separate video and kind of walk everybody through the specifics of my process. So everything I'll mention here, if you missed it, don't worry. Like, I'll make a video just for that. I just want to go ahead and get streaming, I guess. Okay, so here we have the minimum traded of $500,000, and some people start off lower. I think DFV looked for, I think he said like 200,000. But I like to get real picky, and you'll probably get mostly large companies, but here and there you'll see a company that's just, executives are just buying the hell out of their stock. So right at the top, SeaWorld. I don't think SeaWorld's that big. Seas. They are 3.5 billion market cap and about 2 million shares purchased. Who is this? Adams Michelle. Let's find out. Am I going to get a bunch of results if I do this? Let's see. Michelle Adams. Who's this? Okay, so she was just appointed as CFO recently. Okay, then that's nothing, basically, is the way I see that. So that's actually a good example, I think. Big purchase there. It doesn't even have her title yet, I guess. But she's appointed as CFO. Big purchase of shares, but it's basically because she was just brought on board. So that makes sense. She's got to chip in, right? I think that's it for SeaWorld. Otherwise, it's just a lot of selling in the beginning of August. So that one's already out for me. And they had earnings. When did they have earnings? They had earnings on August 4th. And since then, there's been a good amount of selling. CEO, $216,000 worth. Who's this Taylor George Anthony? Maybe that's the outgoing CFO, if I had to guess. So I'm just going to take a guess and say that's what that was. But even aside from that big purchase, that big sell, it's mostly selling. So it's actually kind of deceiving. But I think once you kind of get the hang of what to look for with the insider transactions, you can kind of tell right off the bat. Like it took me, 10 seconds to figure out, okay, that's somebody coming in. Next time, you look at another company and you see like C Remarks or something like that. And it doesn't say who they are. It's a big purchase of a small company. You might automatically assume like, okay, maybe this is somebody coming into the company. And then it didn't take long. That was a quick Google search. So, let's see. Riley, I think they've had inside purchases for a while. Yeah, it's just like nonstop. Some of the financial companies I don't really pay too much attention to because it's just nonstop buying, and maybe they're just I think it would say if they're exercising. Yeah, I don't know what's going on there. Let's see, Riley, 7.8% dividend. Yeah, some of these like financial companies, banks, insurance companies, whatever, if or REITs even, if they have a big dividend, you might see executives buying shares nonstop, and it's not necessarily a bullish thing. I mean, it can be, but it could just be them turning their paycheck into passive income. Collecting dividends on their own company. But this one I'm not sure about. It's pretty high dividend. Yeah, there's a lot of stock purchases. But another way I look at this is there anything out of the norm? So if I just see nonstop buying, I'm like, okay, that could be interesting, but it doesn't seem surprising, I guess, is an odd way to put it. So for this one, I'm just going to skip. See if we can find anything else. I think this is another REIT. I think I'm just going to skip REITs for now. Rocket Companies. Is Rocket... I thought this was... Okay, this is like Rocket Mortgages, isn't it?
RKT?
Yeah.
Yes, sir.
So this is a good... this is an interesting one because they've just been buying nonstop. Is there a high dividend or something? No. They gave a special one-time dividend last year, I believe, of $1. Yeah, $1.01. Yeah, this one, I guess it's similar, but the one note I would make is I've seen a lot of companies that are just either being shorted to zero, or their business can't get going, or whatever the case is, and executives, insiders are just buying up stock left and right, and I don't really understand it. I think who is it? Is it Asana? Yeah, so Asana is one of them. The CEO, Asana's the they're like an alternative to Slack or Microsoft Teams, right?
Okay.
Yeah, I think I tried them once, like a long time ago when I was in college.
I haven't seen them in my field, so that's why I ask.
Yeah, work management platform. So the last time I tried them, they were just a Slack alternative.
Understood.
Yeah, and maybe they integrate like work related tasks better than Slack. But yeah, I used it when it was just like an app, and I was like, I don't see why this company needs to grow. Like I don't see the need for this when there are so many other alternatives. I mean, knowing that, I should have freaking shorted them. But well, I am shorting them, but this is much later. So, but yeah, here's an example of a CEO buying the hell. You can see the stock price here. This is over the past year, about the past year. The stock price is tanking, and old Moskovitz, the CEO, is just loading up. And for those who don't know, he is super rich. So maybe this isn't a lot of money to him and his family, but it is so much buying. So I'm pretty sure this guy at least got close to 50% ownership. And I was watching it. I'm like, what are you doing? And at the end of February, beginning of March, I was curious to see if he was going to continue buying up as many shares as he's been. It's like, is this guy up to something? Is he trying to squeeze the stock? What is this guy trying to do? Because short sellers, I mean, you can see the stock, like it was just in free fall. And this guy has like an average buy price of probably like close to 80 or something. And I think at this point, he probably has bought over $1 billion in shares. So since throughout all this, I don't think Asana's actually made real progress. I mean, maybe their financials are like starting to improve. Let's see. So they have a high revenue growth, but they're not profitable in any sense. And if we look at financials, so it's just mostly red. And for those who don't know, this is ticker.com. It's free to use. You just need to set up an account. And then they block certain information. But you can see most of what you need. So they're not cash from operations positive. They're still spending a good amount of CapEx. I don't know what the plan is for them. I don't know when they become profitable. Bloomberg estimates show over the next year and a half they're not going to become profitable. Yeah, I don't get it. I don't know what their plan is. And just because there's revenue growth doesn't mean a company is destined to become profitable, you know. So yeah, I don't see the need for them. I don't get why they exist when you have other alternatives that are perhaps already integrated in stuff like, you know, Microsoft Teams, you know, or what's the work management software that Microsoft has? I don't remember what it's called, but
It blew up during the pandemic.
What's that?
That really blew up during the pandemic.
Asana?
Teams.
Yeah. Oh, Teams, yeah. So I know Microsoft has some software. I keep forgetting they have so many programs, but yeah, I mean, this is an example of a company where you had massive insider purchases, executive purchases, and it didn't mean anything. And I was waiting to see if he was going to keep going. And I think if he kept buying, it would have put him over 50% ownership. And that would have been a pretty big deal, I think. And that would have, to me, heavily implied that he's trying to do something with the company. But he stopped, I think, right before he got there. And then they issued shares. Maybe he was trying to prevent dilution. I have no idea. But yeah, he stopped buying and the stock just kept falling. So I think this is a good example of why you don't just take insider buying, you know, at face value and say, okay, time to load up on the stock. And there are probably many companies just like this. Like I bet Carvana is one of them. Yeah, I mean, look at this. Like this guy, 10% owner, 42 million. I think it's that's a bug that's duplicated. CEO about $160 million worth of Carvana. And that was at $80 stock price. Carvana's trading at $31.57 right now. So clearly insider purchases aren't always a good signal. But I think once you look here, then you can just look at you know, if you do see big purchases, you could just take a glance at the financials. Oh, not Visa. There we go. But yeah, you look at Carvana, no profitability at all. I guess the gross margins, but I don't really look at gross margins because you can basically do whatever you want with them. Negative EBITDA, negative free cash flow expected through 2023. At this point, I don't even bother looking at the valuation, looking at the multiples, because it doesn't make sense to. I like to look at profitability or trajectory out for the next year and a half to 2 years, because and you know, I prefer to keep it short term because you don't know what the hell's going to happen in, you know, well, next month, you know. So how are you going to predict what happens like in 3 years, 5 years, 10 years? That's where you just throw money at the companies with very well-established businesses and consistent cash flow, you know, and perhaps some of those are undervalued right now. Like Google might be undervalued, you know. Otherwise, you're just kind of guessing, and you don't know if they're actually going to be profitable anytime soon. So, yeah, some of these you just kind of have to ignore. So all these companies are striking out so far. So good old Dr. Pepper, or Keurig Dr. Pepper. Let's see, what is their They got a dividend yield, I'm sure. Oh, it's just 2%. Thought it'd be higher. I wonder if this guy left. This Gamgort. If that's why he sold his shares. Otherwise, you have a good amount of buying. President Cold Beverages sold in August. When did they have earnings? They had earnings July 28th. Okay, so he sold after. These guys could just be taking profits because the chart is, let me bring up the chart real quick. KDP. I'm going to bring up the other chart just so you can see it a little bit better. Okay, so at the top here is a short term for KDP. With the daily chart, just 1 day, minute chart rather. And then the bottom here is the daily 1 year chart. So that guy sold around here, around the $38, $39 level. Let's see. Or maybe sold 35, 55, I guess. Okay. Maybe, did he have options? How did he sell at that price afterwards? Probably, okay, sold August 1st. Oh, yeah, I guess he had options to exercise or something. Because otherwise, I don't know how he sold at 35, 55 when the stock was trading around 39. Sucks to suck. Okay, so I guess he just had options, even though it doesn't say options. Whatever. You got a good amount of buying here. Chief Supply Chain Officer, Anthony Milliken. Let's see. Anthony Milliken. Dr. Pep. Millikan. And let me check. Yeah, it's 2022. He was appointed 2021. So he's been here a year. This guy's loaded up on shares. But is it just him? This guy really likes buying shares. So that's another one. It's like, maybe it's not out of the ordinary. I don't know. Some of these are just weird. It could be bullish, but I like to see when, say, Chief Supply Chain Officer, CEO, CFO, CAO, Chief Strategy Officer, everybody's buying. That's what I like to see. So maybe let's go to cluster buys. How about that? And then we'll bring this back up to 200. All right, that's a REIT. I'm going to avoid that for now. Pharmaceuticals, I'm going to avoid that for now. Okay, I'm just going to find the ones that stick out. Drilling, oil and gas. Not quite. Pharmaceuticals, Certara, packaging. Not so much. Well, there's some buying. What's the price? Oh, this company's just tanking. No yield. Let's take a quick look. Estimates are good. Okay. Growth, revenue, growth in EBITDA, cash flow. What's going on here? Is this the right company? Yeah, Certara. Okay. Let's go to cash flow. So, positive cash flow. Are they just packaging? Healthcare tech. I thought it said packaging. I look at the wrong thing. prepackaged software. Oh, okay. I did see packages, prepackaged software. All right. So cash flow, the free cash flow positive. Their expected free cash flow 124 million next year. So a lot of times I'll just do a little top of the head calculation. So 124 million free cash flow expected for 2023. Let's look at their enterprise value to get an idea for free cash flow yield. So 2.6 billion enterprise value today. Who's that? Notes, you're fired, man. Okay. Let me check it again. 124. Okay, so about 124. And then what was enterprise? 2.6. So that's just under 5%. So this right here is next 12 months levered free cash flow yield. So that should be close-ish. But that's for, I guess, just strictly speaking, next 12 months. But I'm looking at 2023, the entire year. For me, I like to look for at least 5%. If a company's chart looks like, you can just see it here. Yeah. So if this is what a company's chart looks like, this is where I actually pay attention to technicals, mostly on the long term, like daily chart. I don't swing trade or anything like that, like intraday. I don't pay attention to that. But over the long term, if I'm seeing this, we had a high of, was that 45, and then it was trading around anywhere from high 20s to high 30s, let's say on average. That was the trading range. And then since last November, it's just been going down. So to me, this says something. When the markets just refuse to have more buying than selling on a particular stock. So this is telling me that there's something to look out for. Now, if let's say I see that, and that's going to dissuade me from doing a deep dive. If I see a free cash flow yield of, say, like 10%, and it's like a tech stock, 10% is really high. That's twice my personal hurdle rate, 5%. And then I see, okay, estimates are good. They're supposed to grow. They're making money, EBITDA, EBIT, free cash flow, everything's supposed to grow. And their free cash flow yield is 10%. Then I'm going to say, okay, I'm probably going to dive into this, but I'm still going to be cautious. None of that means it's a buy. A good example of a stock like that would be Pubmatic. And Pubmatic is another software as a service company. I think they're fairly diversified. So I just kind of group them in kind of digital advertising, my own little like SaaS category, which I consider to be somewhat weak right now, to have some headwinds given some troubles expected ahead for the economy, or troubles we're already going through, with this, especially related to digital advertising. But I did look at them, I want to say the beginning of the year. I was actually thinking about getting into them. The estimates look good. I think they've held up for the most part. I want to say 2022, they're estimated to grow revenue by 23%. I'm pretty sure that was at least 30 at the beginning of the year, if I remember correctly. So that's kind of, well, it's something I remember, but it just kind of goes to show, like, even if the estimates are high right now, those can always change, and they are going to change by the quarter, because that's how company management updates their investors. They don't say in 1 year, this is how much we're going to grow quarter over quarter, year over year. They mostly just give you the next quarter, and then they'll try to give some guidance for the year, for the current fiscal year. So this one looked decent. The financials looked great. The valuation looked great. It probably still looks great. 8.8% free cash flow yield on a SaaS stock on tech. I mean, 2.8 times enterprise value to sales, enterprise value to EBITDA 7.7 times. Like that's really good. The SaaS stocks are typically above 20, and some of them, well, a lot of them, they're not even profitable, so their multiples are kind of out of the question. And some are trading EV to EBITDA of 40, 80 times, So if they're able to keep growing, then everything looks really solid. However, I looked at their insider transactions, and I thought if if this is what the stock price is doing, high of 77, and this is a 3-year chart, by the way, in the bottom, high of 77, and then this is just what it's done. A lot of lines here, but this is what it's done over the long term. It just went down, and it just kept going down. So beginning of this year, I started asking, okay, is management buying? Let's see what management is doing, because I want to see some confidence in the stock. And they were just selling. So, and it wasn't too big, but I saw no buying. I thought if this company is a good company, if they're not, fudging the books or anything, why wouldn't they buy shares? Why would they at least start to buy shares? So I stayed away, and that's when the stock price was, I think it was in the 30s. Yeah, so it was the end of last year. It was in the 30s. It went down to the 20s. I was looking at it again in the low 20s. I still didn't see insider buying, and I said, you know what? I really like this stock. I don't know too much about the company. I don't understand the SaaS space that well. I just know their target markets, right? And I know that they should have good margins, but I didn't see any confidence from the executives. So I left it on my watch list, and I said, as soon as I see them start to pick up shares, I'm in. And this is all based on fundamentals, evaluation, financials. I haven't even done a deep dive into the business description yet. I just know what space that they're in, and I know the overall like headwinds and tailwinds, right? In the digital ad space. But yeah, so I stayed away. Even in the mid-20s, I stayed away, and then they just kept falling, and they got cut almost in half. And I think they had good earnings, and they had relatively unchanged guidance for the year. They said that they're well prepared for an economic downturn because of diversified customers and all sorts of good things that investors like to hear, right? But since then, the stock peaked at, what is that, high of 23.59. As it went up, I thought, okay, investors seem to suddenly like it again. But this was also during the really strong rally we were having overall. So if we look at beginning of August for SPY, here's the beginning of August. Or better yet, let's look at tech. So XLK for the tech ETF. So from the beginning of August, just what is this? We had a close of 134 there, and then it peaked at about 151. So that's what, $27 increase. That's a pretty big increase. Was that like 20% increase, something like that? So yeah, I look at that, and then I go back to Pubmatic and say, all right, was that increase basically standalone, or was it perhaps due to the markets? And it did increase a big amount, but now it's already coming back down. And through this whole time, I didn't care that it was just going up. I was thinking, so the rest of the market's going up. A lot of stocks that have been heavily shorted are rallying. A lot of stocks that aren't profitable are rallying. So maybe it's still a small company, small market cap. Maybe it's just getting thrown in there with all the maybe FOMO buying or short covering, whatever the case was. And I looked at Open Insider, and there's still no buying. So there wasn't even buying before. But there's a little bit right here. Oh, that was the outside investor. Poor guy. There was still no buying even before earnings. So some buying before earnings, I would have liked that. But that didn't happen either. So I just kept waiting. No FOMO. That's fine. I did the valuation, my own valuation. I said, if this company is what it says it is, and it's that damn good, and execs start buying, then it's worth way more than what it's trading at now. So if executives start buying and they start pushing the price up, say right now it's at what? So it's at 1880. Say executives start buying, and within a week the price jumps up to like 24, right? And it's a lot of executive buying. Suddenly there's some good press coming out, and maybe I look at the long-term chart and the technicals start looking better and it doesn't look so bearish. Maybe I give it a few weeks. Maybe I give it a month just for confirmation. Maybe I compare it to the markets, and markets keep selling off, but Pubmatic is moving up, and maybe other meme stocks or companies that are shorted, non-profits, the companies that aren't profitable, I call them non-profits. Maybe those are still moving down. So maybe Pubmatic is kind of beating everybody else for like a month. Then I'll buy. I don't care if the price goes from 1880 all the way up to 30, because based on my valuation, if they're that damn good, they're worth a hell of a lot more than where they're at now. So I took them off my watch list for now. They're just a hold. But let's see. Let me pull them up real quick. Where's Pubmatic? Okay. Okay, so I think I gave them a pretty crazy margin of safety. Yeah, 50% margin of safety, just because I don't trust them. But because management is buying. But if management started buying, then I'd be like, okay, they're still weak to macroeconomics. But management is buying, and I see good price, good technicals, good long-term technicals. Maybe I reduce that to 30%. And at 30%, they're still 67% undervalued. So, and I'm looking at a price target of 31.40. And this is just my own, we'll call it arbitrary valuation method. But it's basically just multiples analysis based on projections. So yeah, and maybe they increase guidance, right, over that same time frame, and maybe the price target goes to I don't know, like maybe it goes up to 36, and then the stock is trading at 26. Then I still got 38% upside. So maybe at that point, I'll compare it to other stocks that I'm already in, valuations I've done on other tech companies, and then I'll make a decision. But I don't just buy just because the stock price started moving up a bit. I'm still looking at the long-term technicals, and I still want management to buy. And I won't get FOMO if it starts moving up, because as you can see, there were periods where it did start to move up. Beginning of this year, went from about 21 up to 32. That's a hell of a move. They had earnings, and then they dropped. Then they moved back up all the way up to 28, and then they went back down. So this is a stock. So overall, I would say this is a good example of when you find a company that maybe you like, the valuation looks really good, all the metrics look pretty damn good. They have good liquidity too. The balance sheet looks strong. They're not issuing a ton of shares. I don't think they have any debt actually. So everything looks good except the technicals and management. So yeah, good example of a stock of like, if it's worth that much, you don't mind waiting for confirmation. And so far, that's saved me a lot of money if I had bought back when I was first looking at them in the 30s. So I would have been down 33%, and that would have sucked. I was kind of talking nonstop, so I hope I didn't lose everybody. Queen, did I lose you? Sad?
Didn't lose me, boy.
I lost you. I see thumbs up.
But a nice soliloquy, mate. No, it was good. It's good to listen to.
All right, cool. And that's a lot of that. I think is, I think DFE. I'm probably copying DFE, to be honest. Like I think he has kind of has similar sentiment. But overall, I think it's just important not to get FOMO on stocks like that.
Yeah, no, I completely agree. I got faint on nerves. You told me not to, but yeah, it was too enticing.
Oh, Nerve. Let's see. What are they doing?
Well, they're releasing some schizophrenia drug. No, I think there's any other schizophrenia drug out there. Also, Steve Cohen like bought loads of shares, but yeah, for the long term, it could be amazing, but yeah, you never know. So, but I'll go in at 12.
Oof. Yeah. Okay. So you got in close to the peak.
Yeah, exactly.
Highest daily close 13.17. So yeah. I think those you got to be real careful, and I think this is one of those like penny stocks, isn't it? Like real small cap.
Yeah, absolutely. Yeah, exactly.
Yeah, those. If you're like in biomedicine and you know your stuff, then go for it. Trade those biotech stocks. You might make a ton of money. If not, frankly, I wouldn't touch the really small ones. I would want to know something very specific.
Oh yeah, exactly. Yeah, yeah. This one is quite interesting though. But
This
I was
chart is
hoping
nasty.
to. Yeah, yeah, exactly. It's crazy, isn't it?
Yeah. So see, this is one of the gambling stocks. But yeah, I think overall I try to focus on like if a stock is 100 million, I'm extremely cautious, and it could sit on my watches forever, even if it's tremendously undervalued, whatever. I don't care, because at that point you're really I think those you definitely have to dive into, and you have to know something about them. But because they just don't have the consistency that more mature companies have, or larger cap stocks, right? But
Yeah, definitely.
But yeah, here and there, I'll trade some of those. Like gas. Gas is one. Let's see what they're doing. They're probably down.
Yeah, I did that again at Oxy before, like Buffett bought loads of shares, but I
Yeah.
uploaded it just before. So
Yeah. So there's gas, and they're really small. Let's see how big they are. I think this is the smallest stock that I am messing with right now. Keyword messing with, because I don't. My thesis is it's borderline complete speculation.
Hello.
Huh?
Did you? I think it's the Bear Janitor who made a post that Russia has shut down the is that the Nord pipeline indefinitely.
Oh, really?
Yes, sir.
I heard it was just till the 3rd of September for quote unquote maintenance.
Yeah, that's what I heard.
Roger that.
But if it's
misinformation, then potentially.
Well,
look like breaking news though, like
if
new news.
Yeah, if it's like brand new and it is indefinitely, then that's I think we would see a spike in natural gas though, and I'm not seeing that. I'm actually seeing a drop in natural gas.
Understood.
Yeah, I like to just anytime. Yeah, anytime somebody brings up like, oh, this is in the news or whatever, if it's like directly related to stock or commodity, I'll say, really? I didn't see that. I'll just check the daily chart, and nat gas futures are down 5.2%. So if like gas was completely shut off, or like supply was shut off in a big way, I would think it would go the opposite direction.
Market would price that in faster than any of us could. At least that's been my experience. I don't know what your opinion is on that, Luce.
I think for the most part, yeah. Especially when it's like a dynamic trading environment. Yeah, the markets are going to price it in fairly quickly. I will say for natural gas and crude oil to a lesser extent, they're not really trading based on fundamentals. Not entirely. Like I think we had a big drop when I think maybe it was a few days ago when they announced they were shutting down for maintenance, and there was a big drop. So like at this point, I think natural gas is kind of, I think it's just being financially traded, and it's being covered by people who are short selling. It's just being sent all over the place. Probably there's a big disconnect between the futures price and the like actual price, global price, right? So yeah, natural gas is kind of the Wild West right now, I think. Oil, not so much. I think. Oh, what's that?
Can I get your opinion on a ticker?
Sure. You're a little quiet. You're a little low.
Oh. How about now? Is that better?
Like 5% better, but I think we can hear you. It's fine.
The ticker is Payoneer. Payo.
Oh, you guys are looking at these penny stocks, aren't you? How big are they?
No, this is a couple $100 million.
Oh, that's a penny stock. Oh, it's 2.3 billion.
I'm looking at shorting this. However, there are some positive things on the balance sheet, but I see a really high PE ratio, an insanely high PE ratio, and insider selling. So I just want your opinion on it.
I mean, my opinion is if you see all the, criteria that you have to short it, then go for it. I see selling regulatory officer. All right. Co-CEO. Yeah, there's plenty of selling. I mean, let's see. Payo. So fairly young, looks like. So they have 20% growth expected for next year. I bet this is only like a couple estimates. Let's see. 6 estimates. Okay. That's more than I thought, but it's still not a lot. So are they okay? Payment and commerce enabling platform facilitates marketplace platforms, online merchants. Okay. So they're just payment provider. So they should be making very good spreads then. They are profitable. Let's check the balance sheet. Okay, they IPO'd. They issued 5 million shares. That's not the worst. That's actually pretty tame for a brand new company. Could just be warrants being exercised. Stock-based comp, 37 million, 47 million. Okay. That's a little high. It's getting close to 10%. That's not the worst, I guess, but let's say how many employees they have. Because they could be paying their employees stock-based comp as well. Or I'm sure they are. Either way, it's not the highest, but it's not like very low. That was still a pretty good payout for them during the IPO. And typically during the IPO, there's like a good chunk of that is going specifically to management and the board of execs. Liquidity, let's see, current assets, about 5 billion, 5.7 billion. How much of that is cash? Not too much. A lot of receivables. That I'm sure that makes sense given their business. Current liabilities, 4.5 to 5 billion current assets, 5.24 to 5.7 billion current assets. So they're liquid. I would expect them to be a little bit more, have slightly better current ratio given their business, but they don't look like a company that's like destined to fail. Their EBITDA is going to be positive next year or this year. Oh, this says it was positive for last year. Looking at financials, I don't really see anything alarming. Let's check valuation. It's pretty high EV to EBITDA, 57 times. That's nothing to forward. Yeah, that's damn high. So I guess they're just working on their margins at this point. Aside from this, yeah, I would look at insider selling. Do they have earnings coming up? So they had earnings on the 11th. And looks like markets like that. It went from about 570 to 670. That was kind of during the rally. So maybe shorts covering. Maybe they just like the company more. Oh, so that was a beat. They were expected to have negative earnings, and they had 1 cent. Don't know if that includes adjustments, because I haven't looked into that. But I don't know.
Short interest on these guys is very low. I mean, so it made me hesitant to short based on some of the negative indicators I saw. I think you make some good points here.
I mean, I will say, like, if there are this many executives selling, to me, that's a pretty big red flag. And you know, kind of goes same thing as looking at buying, right? If I see all of these execs buying, then I'm very curious. So all this selling, yeah, maybe they know something's coming up. A ticker that comes to mind in terms of a ton of selling at a specific point in time would be Teladoc. Let's see, where is it? Let's go last 4 years. Was it January? Where is the CTO? I think it was was it CTO or CFO? Man, they just have so much selling, period. I thought it was the CTO that bailed. But let's see. Let me see if I can remember looking at the charts.
I feel like that's just a company that has a low economic moat. It's not the hardest thing to get into the telemedicine service provider business.
Yeah, they kind of screwed up their merger with what was it? Longes something, whatever it was. I think maybe it was April. Leading up to April of last year. This is probably it, what I'm looking at. And I saw a cluster selling, and there's another company I'm actually thinking about that did something similar, but saw a cluster selling, and then they had earnings, and then somebody was leaving the company. And there you had the chief marketing officer, secretary, senior vice president, 2 senior vice presidents sell. So a bunch of people sold. Splunk is the other company I'm thinking of. I think this one is the one with the CTO. Okay, here it is. Right here. President, CEO, SVP, chief technology officer, the CFO, more sales by the CTO and the CFO, chief accounting officer. Oh, this one was kind of funny. I remember this one. So you had all these sales. I mean, Splunk was just selling shares like nonstop. It's like it was in style. But you had all these sales, and right after this, what is this in aggregate? Like, what is that? Like 7 million, 8 million in sales, which is a lot, because the company, let's see, how big are they? I think they got acquired or something, or they're getting acquired, but they are 14.2 billion in market cap. They were a little bit bigger, like maybe they were like 20 billion, but still, like over $8 million worth of shares sold was a little crazy. And then they announced that their CTO was leaving. So the CTO was cashing out, like right here, before they made the announcement. And I caught all this selling. I didn't make a trade on it. I was just like, this is weird because, I don't make too many trades based off of transactions like this, especially when it's selling. because executives can sell for a number of reasons just to lock in profits, whatever, right? But I do remember it, and then they announced the CTO was leaving, and let's see, that was April, right? Yeah, there it is. Okay. Yeah, the stock price went from 148, closed at 134 when they announced the CTO was leaving, and they sold before that. So yeah, that was a pretty good indicator. What I thought was funny though was that the chief accounting officer, he sold like some, like maybe like not even 2 million, right? Everybody was cashing out in the millions, and then the guy left, and then afterwards the chief accounting officer was like, "Oh, I need to sell some more, I guess." So maybe they didn't tell the accountant. So I thought that was kind of funny. I was like, sucks to be the accountant, man. Like they didn't fill him in on everything. But yeah, so
Walmart, it's been selling off. Like a lot
Walmart?
of CEOs and
yeah. But anyways, yeah, that was like that's a good example. Oh, the big companies, they might just sell nonstop, man. Like if you see this, I don't think it's a big deal. And to be honest, I didn't think I was going to spend so much time on Open Insider. It's not like this is the end all be all for me. This is just something I like to look at. Notice like all the companies we looked at, I haven't made like one decision to look into a company. But yeah, so typically Open Insider, that's one of the methods I use for screening. Another thing I'll do is I like using FinViz Screener. So I have like a free cash flow yield screener, which I use quite a bit. I have a screener for shorting stocks. I have a screener looking for value stocks. So say we'll go to value. So here, like this is just what I already had set, but I'll change it here and there, or just pretty much anytime I bring this up, I'll change it. But right now it's focused on mid cap, $2 to $10 billion in market cap. Price to free cash flow is under 30. Typically I'll use enterprise value, but that's not part of the FinViz screener. So price is okay, and then if I find something, I'll dig into it. I'll see what the actual free cash flow yield is. This one has sales growth, so I'm looking at high growth stocks that are kind of small mid cap. Insider ownership over 10%. Sales growth quarter over quarter, I want to see that it's positive. Generally speaking, I don't care what the economy's doing. Like this, I'm looking for cream of the crop, And if I can't find anything at all, like say there's nothing here, and that could be how it is for like the next year, right? Depending on how the economy, does over the next year, then I'll loosen up. I'll say, okay, maybe not. Maybe sales growth over 15%. And maybe insider ownership. I don't know. Just any. Maybe I'll take that part out. It opens up a lot, by the way. But yeah, in general, I'll start off very strict, as with the other, as with the rest of my screening process, like Open Insider, for example. So here we got some companies. Oil and gas makes sense. Argentina. Maybe you want to stay away because Argentina's having ridiculous inflation right now. Greece, yeah, maybe stay away for now. Or maybe like it's bottom fishing time, or bottom feed fishing time. And Cayman Islands, what is that? Oh, hey, it's Stone Company. I actually have a play on them. So another thing you might want to do is maybe you're worried about some of these not so developed countries, so you could just filter them all out and just look at US. This isn't surprising to see oil and gas here. This Venom, I'm in on Venom. I think they're pretty good. but they are my smallest oil and gas play right now. But I still like them. Good valuation. Stepstone Group, asset management in the U.S. EXP World Holdings. I know a little bit about them, and I know why they're priced so cheap. That one, yeah, be careful with that one. But this is just based on my screener, just looking at the U.S., right? Not exactly a lot of companies. So at this point, maybe you say, okay, I'm fine with oil and gas. Let's dive into Venom, and then you look into that, and if you don't find anything you like, maybe you don't like REITs or real estate services or asset management, whatever. So then maybe at that point you start opening it up. You kind of expand your search. Maybe it's fine if they had no quarterly growth. So we're barely opening it up so far. One of the things I like to touch last is the price of free cash flow, because that tells me they're already trading at a good value, and then it's up to me to find out if they're trading at a good forward value. Some people might say it doesn't matter if they haven't been profitable. I want to know if they will be profitable in the future. So you could totally do that and just, like take this away. So already I get like twice the amount of companies, but even still, this isn't that much. It's probably insider ownership. Yeah, there you go. So now we got 11 pages. So that's like, almost 220 companies. So you can open it up a lot. There aren't really a lot of filters now. And there's plenty of companies to look at. Oh, look, Teladoc. That's because I took away the profitability, but maybe I throw that back in under 30, let's say. Okay, so now you got less than 100 companies. Some of these I'll ignore, like maybe insurance and maybe residential construction, REITs, maybe the mining stocks. They're going to be valued very differently. You're going to see a lot of them because of how they're valued. But I just know personally, if I want to look at them, this screener isn't saying, go ahead. Like they're good. They're potentially good investments. They're good stocks. This screener is saying almost nothing relative to those industries. So if I wanted to do that, I would either use a separate screener, or I would just look into the companies, separately from this altogether. So yeah, I'm not going to start looking at those companies because it's going to be more or less the similar process did earlier with Ticker. Yeah, that's just like one of the screeners I use. So do something similar with the free cash flow yield screener, short screener. I don't short too many companies. I am very cautious about shorting companies. So naturally, I don't spend nearly as much time doing research on companies I'm going to short. Statistically speaking, it's the odds are against you, so you have to be really careful with shorting stocks. Let's see what else. Funds. So I do track a certain number of hedge funds, big funds like Berkshire, Scion, that's Michael Burry. Some of these I don't keep track of too actively, but say Michael Burry is only holding Geo, so okay, I don't care about him anymore, at least not for now. Baupost Group, this is Seth Klarman, who is a classic cigar butt value investor, and he does really well over the long term. So I like tracking his holdings, and I'll basically come in here. It's already sorted by percentage of portfolio, and I'll start looking at the stocks. I know he started loading up on Liberty Media, and they have several different classes of shares. Honestly, I haven't looked into why there's so many different traded entities, traded securities. But they're all very similar. I think they all have, virtually the same financials because it's the same entity. But yeah, he was loaded up on those. I think it's just it seems like he's mixing the shares around because he sold off the K. or the YKs bought the MKs. These tickers are ridiculous, but it's all the same company. It's maddening. Or I guess that's Sirius XM. But whatever. He seemed to be loading up on that stock. He's not the only one. Warner Brothers, he bought estimated average price paid $20.60. So what are they trading at now? See, that one's down quite a bit. But a guy like Seth Klarman, he's not trying to make a quick return. That's probably a sharper drop than he expected within a couple months, but he's pretty. I think he's pretty diversified. He has a lot in communications, and I don't blame him because the communications sector's been beat to hell recently. Some would say for good reason, but yeah, he's just a good cigar butt value investor. Cigar butts mostly for like the big companies. Like most of these, you can see market value right here. Like the smallest, what's the smallest? 38, is that? That's got to be a million. So 38 billion. Let's check SVFAW. I think that's in millions. SVFAW. Oh, I don't even know. I don't know what that is. Okay. Oh no, that's in dollars. Oh wow. Okay, never mind. He does buy very small companies. Those he sold. Those were warrants. Okay. Oh, those were warrants, I see. Let's see. The companies that he puts a decent amount of money in. So let's say like over 1%. Oh, there's Meta. Oh, he actually sold some. Sad story.
So his lack of selling on Warner Brothers, you think that's going to make think he's suspecting a bullish breakout of its current consolidation based on the fact that he's not sold?
Well, here's the thing about these is that the information you're seeing here is up to basically like 4.5 months old. So the source date for this, you can see it on the right, is June 30th. So they update every quarter. That means he could have made these purchases at the beginning of the quarter, on April 1st. And this isn't reported until August 12th. So the only way you can kind of guess like when purchases were made or sales were conducted is by looking at the estimated average price paid or sold or whatever. So Warner Brothers, I mean, he bought it at 20. So man, he bought, I guess, as it was coming down leading up to first quarter earnings. So at this point, it's down a lot from when he bought. Either he looked at it along the, I guess, after the second quarter because he was still, I guess he's still holding at that point, right? And maybe thought this is a good price to average down, or he maybe since then he's already sold. So he just said, I'm going to cut my loss. Maybe he cut his losses at, when it rallied before third quarter earnings. So that's the thing. You're not going to know. But that's kind of the reason why I pay attention to the big funds, because the smaller ones, they're going to trade basically more short term. And you just never know what price they're getting in and out of until the actual report date. So short answer is we don't know. Like maybe he's still in, maybe he averaged down, maybe he's already out. So, but yeah, it is more useful for the bigger funds, the guys that aren't such short-term traders. Like I don't think Seth Klarman, he's not really a short-term trader. Unless, he like makes all the money he expected to make very quickly, So he has some stock that he's owned since 2008. So yeah, when you see that kind of stuff, you can think, okay, maybe he's not going to sell right away, right? Barber, those are probably very small stocks. Fiserv bought in fourth quarter of last year, and he cut by 11% in the recent quarter. Average price paid 104. Where are they at now? Fiserv. So fourth quarter of last year, paid 104. So yeah, maybe he was just like, you know what, I'll sell in this rally. So who knows? Or I guess maybe he sold back in the second quarter. Yeah. So it's kind of hard to see what they have in mind, what they have planned. He's still, I think he's a little bit less of a cigar butt investor these days, just looking at his holdings. But he has done like multiple interviews talking about it. But I mean, yeah, I talk about him quite a bit, but he's not like my number one investor that I watch. Also watch Stanley Druckenmiller. He's one of the most successful hedge fund managers of all time. But yeah, like he got me into Coupang. I didn't even really know why. I was just like, you know what? I'm gonna follow you into Coupang. Let's see what happens. And I got in, I think, at like 11, 12, and now it's trading, I think, below 17. Let's see. Okay, 16.53. So I'm making money on those. And I think he added in the first quarter. Yeah, he added in the first quarter. It's not shown here, but yeah. And you look at the percentage of portfolio, it's 18%. So the way I see it, it's like Stanley Druckenmiller. If he's building up a position that big, there's a pretty damn good reason. This guy didn't become, over 40 years in the industry. He's not one of the world's best hedge fund managers by just YOLOing, So pretty interesting. The financials don't look that good, but they are kind of seen as like a little Amazon of Korea, and they have some exposure to Chinese market, Japanese market, etc. Just, Southeastern Asia. But yeah, I'll watch his portfolio specifically. And I'll listen to his interviews whenever he does them. So he might be, him and Peter Lynch are probably my favorite investors. But you don't really see Peter Lynch's investments anymore. Warren Buffett, I think most people follow him. Alan Weber, he's somewhat known. Where are his holdings? There we go. Oh, wait, no, he's done. Yeah, I guess he's done. I haven't looked at him in a while. Soros, I track because he's massive, but honestly, I mean, you look at the top and it's like he tried to swing trade Rivian, or he tried to buy it for the hype and then it just tanked on him. So I don't really know what his plan was there. I don't know if he was looking to like harvest for tax losses. Like I don't know what was going on there, but I only follow him because he's massive and because other, a part of the markets follow him as well. I'm just curious what he's doing just to see if that's going to affect prices of any stocks or whatever. But at this point, I don't know what he's up to. So I don't follow him that closely. Bill Ackman's, he's another fund manager that I compare to George Soros. Like, he cashed out of Netflix. I mean, he basically paper-handed Netflix. He bought it, looking at after hours chart when they reported earnings. When was that? Was it the first or the second drop? I think it was this drop. Oh, no. It must have been the I remember there was a big upswing in price, so it makes me think that it was back in January where he bought, and then it was reported that he, it was made public, and then the share price like started going up in a big way. So I think it was January, and then it went down again, and then he just sold. And I was like, why did you buy? If you were just going to sell, if it just went down in one quarter, it didn't make sense to me when you manage that much money. So, yeah, even the big like fund managers, I'm like, I don't know what you're doing. So I don't follow all of them like to a T. But looking at that, looking at Open Insider, looking at screeners, stuff like that. If a lot of stuff starts to, kind of the stars are aligning, then I get very interested. Unless you're a Stanley Druckenmiller. If you're buying a stock that's kind of small, it doesn't look good, and you're loading up on it, I might be following you if you're Stanley Druckenmiller. So otherwise, I'm very, very specific, and I do my own valuations. I've done valuation on hundreds of companies year to date, and I keep track of everything too. So my portfolio, my trades. Yeah. So maybe this can count as
Get your drink, dude.
What's that?
Get your drink.
Like a beer drink?
Oh, no. Whatever you want. But yeah, you're doing a great job, for
Let's
sure.
drink some water. I'd have to step away.
That's what I'm drinking.
Yeah, I'm still on my diet. I haven't drank alcohol in a whopping 2 weeks.
Nice job.
Yeah. I feel like a new man. Not really. But not drinking's cool, but drinking's cool too. So, what are you going to do?
That's right.
Oh, so we got 20 minutes. Is anybody making last minute trades?
Everybody should have a drink.
Everybody should, everybody drink now.
Yeah, show us how you trade in options, an options contract through TOS.
You want to see some trading? Let's see. Let me look at I do have a trade I need to adjust. Let me take a glance on the side here. Okay. There it is. Okay. Fan favorite GME. I have to adjust a trade that expires today. I sold put spreads, strike 30, short strike 30, long strike 28, because I was worried that something like this could happen, that the stock price could just, drop below 30. Plan here was to get assigned shares and then to sell covered calls once assigned. Whether I would sell at the money or in the money covered calls, I wasn't sure. It was going to depend on, what the price actually went down to. At this point, I'm kind of comfortable taking assignment of the shares at strike 30, but I kind of want some more premium. I'm making good money on the strike 28s, so I'm probably going to close those out. Let's see. I have 5. Wait, no. I want to sell. There we go. It's going kind of slow. I assume I got a lot going on right now with the Discord streaming and everything. Should be smoother when it's just through YouTube, hopefully. So I can just sell these. Okay, let me go to... Okay, there we go. I got filled. I'm out of those. And I think these, I kind of want more premium. So let's see. I don't mind going out further. Like maybe September. I got some protected puts right here at strike 25. So I kind of like chasing premiums on stocks like these. It's not necessarily the wheel. Like I know at this point I'm destined to be assigned the shares, right? So when I get assigned the shares, that's that, And then it's okay, time to turn it around and time to sell covered calls. Ultimate goal is to sort of collect premiums to kind of increase my buffer, increase the cushion should I be assigned shares. And then if I am, and say I'm like immediately down, right? Because I think I sold those puts. I sold them for 92 cents a piece. So I'm well below break even. I mean, it's not that big of a deal because, it's a small position. All my positions my options positions are probably smaller than 1%. There are very few exceptions, but yeah, if I get a sign, it's not a big deal. It's all part of the plan. So I'll get a sign, but I kind of want to delay it because I know I can get more premiums. So, and the premiums for September 16th, this is through earnings. Earnings are expected next week on the 7th. So was that Wednesday? So yeah, now I have to decide, okay, do I want to just sell through earnings no matter what? And so far I'm thinking yes. However, I'm not sure I want to just have unprotected puts still, short puts that is. Not because I'm not comfortable with getting assigned the shares, but there's always a chance that stock price just drops, just for the hell of it. There's a chance it skyrockets, right? But I'm not a fortune teller, so I have no idea what's going to happen. So maybe I'm going to roll those puts from strike 30 expiring today to maybe September 16th. Let's see. I like to look at covered return, which tells you the annualized return you would get for selling those options. At least that's how I interpret it. So if the price were to remain flat and let's see, these options expire in 14 days. If I sold the same option every 14 days for the same price and the price remained flat forever, I would make 133% annualized return, which is ridiculously high because earnings are next week. So that'll probably be cut in half at least once earnings pass. So, but that's kind of what I used to gauge. Now, they're pricing in a lot of volatility, right? Understandably so, because it's GameStop earnings. So I do want to take advantage of that premiums, but again, I don't want to be exposed to unlimited downside. So let's see. I'm looking at another screen for a bit, but okay, if I roll these to the same strike, I could probably get $1.25 extra premium. So $1.25 plus that 92 cents I already got. So that would be what, $2.17. So subtract that from the strike that I'm selling at, which is 30. Now my break even is 27.83. If you're following the math. So that's not far from the price where it's at right now. So that's not too painful, really. And then I can start selling cover calls. I can start selling them at 30 immediately, or once I get a sign, that is. And assuming the stock price just doesn't tank, during that period, then I rinse and repeat, and then I start wheeling the stock. It's a volatile stock, so it's not exactly the best stock to wheel. So I would say, like, if you're not used to wheeling very volatile stocks, don't bother. Wheel the safer stocks. Get a better hang of it, because this isn't a stock that trades like normal stocks. It really isn't. So all these things considered, I do want to roll, but I still want to protect against downside. So maybe I'm increasing the premiums by another maybe $1.25. I'm kind of being conservative. I might get more than that. And looking at the put prices, we're pretty far out of the money if we look at like 22.5. And that's not exactly going to fully protect me from a big drop because, there's a wide spread between the market price and, for example, 22.50. So there's still a lot of money I could potentially lose right there. But the big thing here is I want to protect against like a crash in the stock price, which you never know. So maybe I move it up. I do have some protective puts already at strike 25. Let's see. And I can always go further out. I mean, really, you can go as far out as you want. See, I had covered calls out of the money for October, and those are now out of the money. So I'm keeping the premiums of those if the stock price stays flat or goes down. And then I just rinse and repeat. There's some YOLO calls way out here at 62.50. So if I don't like the price for September, I can go further out. I'm typically looking at covered returns, which if you're using Thinkorswim, you can set this up by going to layout and then customizing, and then you can add whatever, whatever indicator you want. There's a long list of them. But yeah, I typically refer to covered return. Look at delta probability out of the money, which is the odds that the contract, that strike for that contract will be out of the money at expiration. So overall, I'm using statistics, I'm using the delta, and I'm using covered return to kind of drive the decisions for trading options, rolling options specifically. So let's say covered return 78% annualized for October, strike 25s. September, let's compare it. We got 126% covered return for 25s. That makes sense because earnings are coming up and covered returns are always going to be higher for the front months, the front weeks, the early weeks. So then I'll look at the puts I'm looking to roll, strike 30. That's 139% cover return for September. October, 85%. So I'm going to pay more for protection to the downside in October, but I'm going to receive less on an annualized basis for rolling the short puts. The obvious risk here that, mentioned a few times already is earnings. So it's, to me, it would look like, not considering any events or anything like that, it seems that it would be more beneficial to roll to September because it would be a better, return versus risk, better payout overall, right? But October might give me more time. So I think I'm just going to go with September, and I'm going to make sure I'm hedged to the downside still. So I'm going to check my risk metrics. Okay, so after closing those puts, I do need to open up some new puts. So I'm definitely going to do that. All right, so let's roll those puts to, let's say, September 16th. And I'm going to be a little greedy. I'm going to try to get $1.35. Let's see if I get that. And I got it. Okay. Not bad. Now I need to protect against downside. So something I might do, generally speaking, whenever I have very high risk, such as selling short puts, which is high risk just because they're cash secured, they're still high risk. I always want to be hedged to some degree. So in through the duration of those puts, so they expire September 16th. I could buy September 9th puts, which are going to be incredibly expensive, if I wanted to pay less and just hedge through earnings, for example. But post earnings, assuming these puts are still in the money and I still want to try to hang on to them, I'm going to need to purchase more puts expiring the same week as the cash secured puts that I sold. So that's another thing to consider. And this is probably getting complicated. So all in all, I'm just rolling for more premiums, but I want to stay protected because of a key event that's happening that could cause extreme volatility. The second part is I want to use the premiums that I just got, the extra premium that I just got, to finance the puts. So what I could do is I could just buy, if I buy 4 puts, for example, I am already hedged against the downside. I sold 5 cash secured puts, which isn't that big of a deal for me. But if I only bought 4 protected puts, I'm still very well hedged to freaky downside. So at some point, I'm making money the further the stock price falls. And I'm okay with that. Rather than having like, just being flat or losses limited or, further loss until the stock price hits 0, right? So I can leverage the downside, and past a certain point, I'm making money on the stock price dropping. So if I buy 4 of these for $1.40 each, that will be completely financed by rolling the puts. Eventually, I'm going to get assigned unless the stock price just, soars back up. But I'm going to assume full expectation that I'm getting assigned, that at some point the markets aren't going to let me roll because it's too deep in the money, because the liquidity is really bad, whatever the case is. So at this point, I'm in the money. I'm getting assigned. I'm going to try to cheat assignment as long as I can. But the thing I have to keep in mind is that I still need to hedge. So however long, if I keep rolling until September of next year, I'm still going to want to be hedged to the downside. So for now, I think the strike 25 puts, I think, are a fair hedge. I only need to buy 4, and I'm still leveraged to the downside, so I'm just going to do that. That's going to cost me $560. Not bad for crazy hedge against crazy downside. So yeah, that went through. I can still lose money up until the price starts really moving below 25. So if it does, I start making money. If not, it's no big deal because, well, you can't see, but on my screen I can see like the dollar amount that I have at risk, and I can see exactly how much money I would lose should the price continue to go down. So, yeah, that probably that walkthrough probably covers how I handle most of my options trades, to be honest. And I probably lost some people, which is okay because this is recorded.
That's right.
Yes. So yeah. And that was a trade I actually needed to make. I'm glad you brought it up because the market is closed in 3.5 minutes.
Good timing.
Yeah. So typically Fridays are very busy for me, which makes it ironic that that's when I decided to stream. But yeah, I'll probably be more active, so you'll see more trades. Today was quiet. Next Friday, no, not next Friday. 2 Fridays from now, the 16th is go time because that's a monthly options expirations. And if I'm streaming through that, maybe I will, but yeah, that's a big rolling time for me, because I'm a premiums collector. I like selling volatility. I don't mind rolling options. I'm an active trader. There might be 50 positions that I have to roll in 2 Fridays, so we'll see if I stream at the same time, or maybe I'll do it all in the morning so that I can stream, after that. So yeah, and I think GameStop, if you were to look at, say, like on Reddit, like r/Theta Gang, and you talk to the guys that just sell Theta, you look at this chart and look back since last June? So after that big spike in last June, it came down to the low 50s. It's been volatile for sure, but if you keep your wits about you and you know what you're doing when selling premium, this whole time period, you're probably making pretty damn good money. But this isn't for new traders. It really isn't. And this isn't a wheel. Wheel is supposed to be for predictable stocks, range bound. They have a dividend maybe. So this I wouldn't really call this wheeling. This is definitely high risk because at some point the show might end and GameStop just goes down and that's it. Or what happens if the markets crash? We haven't really seen how GameStop does through like a normal market crash. I think back in 2020, oh, wait a second. Was this? Oh, yeah. No, we did see it. Never mind. Holy hell. Yeah, that was a hell of a drop. Okay, so yeah, this is what GameStop did in a market crash. It got cut in half. Um, so yeah, that could happen. It could squeeze again. Just because retail traders and excitement and institutional trading, right? But you never know. But if you're a theta seller or selling volatility, you love GameStop. So yeah, if I brought up like a profit and loss diagram on what it looks like, if GameStop, across like the whole range of prices, the lower it goes, I make a good amount of money. I make more money. The higher it goes, I make more money. If it stays, like if it were to stay flat now forevermore, I'll still make some money. It's just going to be way less. I think these slow decreases hurt me more than anything else. So like the past couple weeks, I guess the last spike, I made sure I was very well hedged before volatility ramped up. Or beginning of August, late July. That's when I was like, okay, I know earnings are coming up. I'm gonna make sure I'm hedged just in case, and I'm glad I did, because this drop isn't really hurting me that much. There's the bell. Did y'all hear that?
No. But
Oh,
it's
you
over.
hear that? Oh, okay, cool. It'll be in the recording, and it was very loud. So, at least in my headphones. But yeah, it's the bell. What did the SPY close at? 1.5% down. Nasdaq.
1.07 on the S&P.
Yeah. The Dow. Oh, the Dow didn't outperform. I mean, marginally. Yeah. Nasdaq's showing weakness still. By the way, the Nasdaq sucks. If anybody's ever looked at the components, the Nasdaq sucks. So, yeah. S&P is probably the way to go. Or if you like the high growth, XLK is good. I mean, I prefer XLK to the Nasdaq. How did that do? Whoops, not that one. XLK outperformed the Nasdaq. That's nice. Still underperform the markets though. So yeah, since markets close, I guess we could chit chat. Is there anything you guys want to talk about?
What was that last ticker, Luce?
XLK. That's the technology sector ETF. Small rate charged for just holding it, but you get like a 0.97% dividend yield. So you're not paying. Well, you're still getting paid. They're not really taking away too much of that dividend.
Some decent volume, I guess, on the options. No.
Yeah, it's okay. It's like, let's see. I mean, it's pretty low, but like let's look at the front month. So like at the money, I think what many consider the standard is you want to see like volume of 500 contracts at the money. Volume right here, it is 35 for the call side. And then
So ballpark 500 is the number you like.
Yeah, I think that's what a lot of people would say is what to look for. Here, it's obviously not even close.
Yeah.
But it's an ETF, so I know it's going to trade a certain way, right? I know it's going to follow the tech sector, right? The spreads are awful. This might be just because, maybe it's just because of market close, shenanigans or whatever. So I didn't see the prices before the market closes, but I mean, no matter what, you're always going to want to watch the spreads. So definitely buyer beware for that ETF. Or if you just like the tech sector and you don't want to mess around with stock picking or options, then, maybe you just buy the XLK and that's it. And you get your 0.97% dividend. Maybe it's like 0.9% after the management fee. ETFs are typically really, really low. So yeah, what's everybody's plans for the rest of the weekend, or the weekend's just starting, I should say.
I might have a beer later.
Yeah. What about you, Raziel?
I'm definitely gonna go to the hometown soccer game, and I'm talking on that new mic that some janitorial person recommended.
Oh yeah, it's a good mic.
Yeah.
Are you setting it up at the game?
No, definitely not.
I was about to say. I was like, man, that's pretty. You got a little case for it and everything. You know, you gonna be an announcer.
No.
That'd be cool.
I'll be the degenerate in the crowd, throwing around popcorn and such.
Throwing around popcorn and telling people how to trade options. People that don't even care.
Yeah, super small league. Not enough people care.
Yeah. Well, I think probably call it a day unless any of y'all have questions, comments. Maybe you don't like my trades, my strategies, whatever. Kind of tip of the iceberg. Yeah, kind of tip of the iceberg, I have to admit. I have a few apprentice janitors, you might say, that I teach, and they will tell you I've been talking with them since November of last year, and they still don't know everything that I do, and I talk to them every single week. So yeah, just kind of getting started here. But
more you put in, the more you get out.
Yeah, basically.
Hey, Lou.
Yeah. Hey.
I got my $100,000 participation award, and I kid you not, what I just learned in the last hour, thank you very much for your
YOLO
time.
into GME?
No, unfortunately, you can talk to some of the other members that I talk to. I'm low baller. I don't have it. I'm still learning. So I start very small. If I can build it to where I can play with loose, but I'm sorry, I'm in like the pre-K playground right now.
Yeah, there's nothing wrong with that. I mean, I think I was telling Queen the other day. She was talking about wanting to get more into it, and what to do at the start when you already made a good amount of trades. Based on let's say for speaking purposes, you don't really know much, right? And you just made some trades, and you're like, I don't know what I'm doing, And now you want to learn more, and you want to get an actual process down. What do you do with the trades you already made? What do you do with the stocks you already bought and you don't even know if they're good buys? And it's going to take you time to figure out whether they were good buys or not. The way I would tell anyone is, if you don't know why you're holding something, if you don't know why you traded something, and if you don't have a plan, if, say, the stock price suddenly drops, if you lose a lot of money and you're just like, I guess I got to sell, you need to liquidate, whatever, basically immediately. That's not financial advice, obviously, but like in general, if you don't know what you're doing, it's time to head for the exit door until you actually figure it out. And the worst case scenario is that from here until you learn everything, you are completely flat, because you just pull everything out, right? So the markets could go south, and you could actually be glad in hindsight, or you keep track of the trades that you made and the stocks that you bought. Fast forward 2, maybe 3 months after you've learned a good amount, or however long it takes you, and maybe you look back and you're like, holy crap, I would have lost 50% on those trades or that stock or whatever. So yeah, there's no room for FOMO in the markets. The markets will shake out all the gamblers, the people that are FOMOing. The markets are not kind to the gamblers. They really aren't. And all the people that made a ridiculous amount of money on Reddit or wherever, TikTok, wherever, they are the equivalent of a one-hit wonder, in music. Hopefully they make some good albums in the future. Otherwise, you're going to forget them because they're going to lose whatever they made at some point. If that is you, maybe you cash out. That's one of the students I have. He'll admit that he made bank on AMC during the squeeze last year, the big squeeze, and he made a good amount of money, but he's still in college. He's staying in college. He's continuing to learn. He's one of the guys that I talk to frequently and I try to help, work with. And he admits it. Like, he knows that he got lucky, and he, cut it. He cut his gains. He took big profits off the table, and he's like, okay, I need to make sure that I don't lose this, and I want to learn how to do it again, possibly if I can in the future. If I can't, I want to know how to actually be a long-term trader, not just a one-time, one-hit wonder. So I think that's probably one of the best decisions you can make, just admitting starting out that you really don't know anything, and that's fine because nobody is born having a good understanding of investing or trading. So just admitting that, like, you're already in a really good place. So good for you, man. And
Well,
kudos on your
I like
$100,000.
I actually like to surround myself with people who are smarter than me, and you learn from them and listen. And I do have a little jealous bone in me. My wife listens to you and she goes, "Is Loose on?" I love his
Oh,
voice.
nice. Oh,
So my wife.
I'll start talking like Kermit the Frog from here on out, so nobody
No,
feels cucked.
no, don't worry. A few in the talk actually met Mrs. On Reddit, Elderberry. That was quite entertaining last night.
Very nice. But yeah, no, lot to learn for sure. I mean, I'm still learning. Like, I'm not a master of the universe when it comes to trading. Not even close. And the guys that I follow, like, I mentioned Stanley Druckenmiller. He's been in the industry for over 40 years. So that's something to always keep in mind. Anybody streaming, even myself, you find somebody and, like, okay, maybe they have, like, I have a bit over 10 years experience with the markets, finance, economics, but that's kind of young. Anybody that's been doing it for a couple years and tells you otherwise, like, no, I already have strategies, blah blah blah, you really got to take it with a grain of salt. So the oldest people know best, the most experienced ones, because they're the ones that last the longest. Everybody else gets shaken out. So yeah, even the stuff you hear here, or colleagues, other people that know a fair deal more than you do, you always got to check that stuff. So, but I will say the people that started trading before COVID and are still, like, trading actively and didn't lose everything, tip of the cap to them, because the past 2 years have not been easy market trading. 2.5 years, this has not been easy. And there are a lot of funds, there are a lot of people that, traded on their own and they tried to beat the markets, and then the markets just took off for 2 years straight. And they're like, what the hell am I doing? And then the time that they're like, after 2021 ended, the markets were up 29% or whatever. Then they're like, okay, the markets are up, what was it, like 30% in 2019 maybe? Or I don't know. The markets are up like crazy the past 3 years. And then they're like, I give up. I'm not going to try to beat the markets. I'm not going to use my value investing strategies. I suck at the markets. The markets are way better than me. And then fast forward, 9 months, 8 months, and the markets are down. So, it's not easy. So if you've lasted this long, through crazy years, kudos to you. Assuming you haven't actually lost like 50% of your portfolio value, whatever. So I'd say if you're flat over the past 2 years, I think you're okay.
I'm at 43%, but do not worry. It only equates to like $300. So,
okay.
But I call it the cost of learning. And shout out to T Prince. I followed one of her trades, and she was my only green of the day.
Oh, very nice. Okay, good job, T Prince. Not just do it like 500 more times every year for the rest of the time.
When was it? Which trade?
She doesn't even know.
GSAT.
Nice.
Satellite man.
Satellite. No, he's anti GSAT. He's all about ASTS.
I played the puts. I'm playing the downside. I'm on Desmond's side.
That was Luce's play, not mine. Luce he's the one that put the straight puts on the satellite guy. He did it while he was talking to him. He's like, okay, I'm gonna buy a put right now.
Well, I did puts on ASTS. Let's see, through earnings, I think it was around 12, but they expired January. So, I mean, I guess they'll launch their satellite, right? Let's say they launch the satellite and then everybody gets excited. Let's say everything goes to plan. I don't know. Maybe it squeezes again. But I don't know if that's like enough of a catalyst to send the stock to the moon, because I don't think they yet have a trajectory for like good profits. So they're kind of like a biotech stock, like an early stage, early clinical stage pharmaceutical company. So you have no idea, but I know it's been spiking. I know it's been rallying. So for you technicals guys out there or gals, there's a nice gap right here. Some people believe in the gap trading. They say all gaps are closed. So who knows? Maybe it just comes right the hell back down within the next week. But yeah, I got time for that one. And GSAT seems to be in a better position overall. Not saying I'm buying GSAT at this price, because I'm pretty sure it's overvalued as well. But maybe the market crashes and GSAT Global Star says, "Hey, our contract with Apple is still a go, and we're satellite phones are coming, next year or whatever." And this thing goes to, I don't know, 20 cents, right, during the market crash. Maybe I'm loading up. Maybe I'm buying a couple thousand shares. Why not? Not that I think we're destined to have a market crash, but things are looking a bit shaky.
Indeed.
So the whole class, I like to refer to everything you provide us. What you provided us was your fishing holes. And I'm sorry, I'm a country boy, so everything goes back to redneck stuff.
Rock on.
But with the fishing holes, it doesn't matter. Each one of us throw a pole in, but we know where to go to try to catch fish and get the information we need. Doesn't tell us what the information is, how to get it. And teach a man to fish, he eats forever. Give a man to fish, he eats for a day.
It's true. Unless you're really hungry, it doesn't even last the whole day. You lose your fishing rod. A lot of things can go wrong. But yeah, if nobody's got anything else to say, I think we'll call it a day. Call it a good Friday.
Lose.
I got one.
Have you thought about automating any of your research?
My research? Yeah, learning to code is on the list. It's on the long list. It's just financials. It's just SEC financials, and I'm sure if I just learned a bit of Python, I could implement it. And this is gonna sound boomer of me. I'm not an actual boomer, but I kind of value entering my own financials because it's very easy to spot something as I'm doing it. And I'm decent at reading numbers on a financial statement. I can just type in a number and I'm like, okay, that looks weird, But that said, I'd probably prefer it if everything was automated on the financial side.
I'm working backwards. I've got most of my education in technology and just coming around to the stock market.
Yeah. I think the Croatian man has something to say.
Yes, I'm here.
Of course he would.
What is it, like 10 o'clock? Oh, it's not too late over there, right?
No, it's done. I just got out of the dinner. But I wanted to talk to you today about it. But since everybody's here, we can maybe discuss a little bit. Meta raising debt. It's really interesting. Did you maybe get a chance to see that?
Yes. So for Meta's a hot topic right now. But
they're meeting for a potential bond sale. First time ever.
Yeah. So
they don't have any debt for 10 billion of bond sales.
Yeah. So just to address the bond sale first, the bonds that they issued, they were oversubscribed, which means they asked for 8 to $10 billion worth of bonds. That's how much they try to issue. They were, I believe, 3.5 times oversubscribed, which means they got what is that? $25 billion worth of offers. So typically in corporate finance, in lending, if you're oversubscribed by that much, that means investors are dying to get their hands on your bonds. And it's not uncommon for the big companies, say like Microsoft. I don't know. I really don't know.
Exited before the 2008 crisis, and then they returned the debt.
Yeah. So, like, I don't know how oversubscribed their bonds are. I'm sure they're oversubscribed to some extent, right? When they issue new debt, but that's a pretty big deal, and that implies that there's a lot of confidence in the bondholders for Meta to continue to maintain payments on those bonds and pay out in maturity, right? And I think they went.
But why are they doing it? They have 40 billion in cash.
Probably just for cash flow. Okay, well, hang on. I'll get to that in a second. I'm just talking about the bonds first. So, like, they were oversubscribed, so a lot of confidence in that, right? They got in at a rate significantly lower than what they would have gotten normally, like than market rate. So the yield that they're going to have to pay to the bondholders. So that's another good sign, at least if you're a bondholder. So this just really added to their cash flow. And because they didn't have any real debt beforehand, their, multiples, debt to EBITDA is what I would look at. That's still really, really low. So it's probably like, let's see, they got 16.7 billion in debt, and they're estimated to have 58 billion in EBITDA next year. So that's
40 billion cash.
Yeah, and then they have all this cash. 40 billion in cash, 58.5 billion in cash from operations, estimated to have 27.4 billion free cash flow for next year. So they can pay off the entire debt and then some, like plus $1 billion, with just 1 year of free cash flow. And they were a mega cap. They're a massive company. They have really high margins. Like, this is insane. And I'm sure you'll find plenty of other value investors all over YouTube that are basically saying what I'm saying, maybe a little bit more, excited about it. But this is overall, if you're a bondholder, you're throwing money at Meta. Like, you don't care what the business is. You know that they got the cash flow. You are not doubting their ability to repay that debt whatsoever. So, as far as
let's talk reasons.
Yeah. So as far as what they're going to use it for, Meta doesn't exactly have a good history of investments and like their internal projects, right? I think it's safe to say that most of their success came from copying other businesses and business ideas, which is whatever, right? Companies do that all the time. Meta's just been better at doing that, I guess. So the internal projects they don't have a good track record. And I think they just gave up on their live game streaming project that was in the works for 2 years. So they gave up on that. They couldn't break through that market. They've given up on several other things, like having a news feed, for example. But I'm sure there are others that aren't coming to mind. So the way I see it is they could do one of two things. They could continue to invest in new projects, right? And I'd rather they didn't just fail at every new project. I'd rather they actually have a good one. And it does seem like they're starting to shift towards a slightly different strategy, which I'll mention in a bit. But the other thing that they can do is they can retain some of that cash and use it to buy back shares, maybe pay a dividend. So they got a lot of cash flow. Now they have even more. They can buy back a ton of shares with all the cash that they have. The debt was priced low. I think something like maybe the rate was like 3.5% that they're paying on the bonds. Repurchases of stock, they made $50 billion last year, which is insane. In the last 12 months, $53 billion worth. So they can use that debt to do all sorts of things. If they kick up the stock repurchases, I'm even happier. Like that's fine. They don't have to do any projects. Issue debt so you can buy back stock. I know you're going to make the money back. You know, at this rate, there's so much. They have so much cushion in terms of cash flow from operations, free cash flow. They're not running out of money anytime soon. Be as bearish as you want on the business, on Facebook, on Instagram, whatever. The fact is they are not burning money. They just keep churning out profits, like record profits, over the long term. So no real problem there. So I hope that's what they do. But what I do know is that a good portion of the debt is being used for investing in data centers. So they recently found out. Let me see if I can bring up a note here that I made for myself. Where is Facebook? They recently, I want to say maybe the beginning of this year, they started shifting their like discovery, their platform discovery feature. They started shifting that to, okay, here we go. I'll just throw this up here. They started shifting away from having their content discovery based specifically on user interaction. So you say, I like this, I want to see more of this, whatever platform. The platform then shows you more of what you specifically requested, right? Well, they started switching to basically just using their internal AI systems that decide for you. And Google has been using this, by the way, and it's been working pretty well for Google. So anytime you see something that isn't quite related to what you said you liked, it's their AI system doing its job. Since they started implementing that, they noticed a big improvement in user engagement. Now, they were only using that, I think, let me see if I can find it. Trying to find the percentage that they were, like how much of user engagement was attributable to it. It was a pretty small source. It was or amount, a small percentage. It was something like 15% of user engagement of discovery was driven by the AI systems at the beginning of this year. They ramped that up to something like 35% as of the last earnings call. And they said they're going to continue to increase that while they started increasing CapEx into the data centers. So interesting thing is everybody keeps talking about the CapEx on the metaverse and the virtual reality subsidiary and stuff like that. A big chunk of this recent capital expenditures is going into data centers, and that'll benefit the metaverse for sure, or whatever the metaverse is going to be. But a lot of that is going into their actual AI systems. And if you listen to the earnings call, that's all Zuck was talking about. He didn't, I think maybe he mentioned virtual reality a bit, reality labs, whatever it's called. But he was just going on and on about the AI systems and how it's improving user engagement and discovery. So the thing about that is, okay, high level, they're now throwing a good amount of cash at building up their data centers and shifting more towards their internal AI system based discovery feature, right? Which is something Google is already having success with. Zuck said that they were using it a little bit at the beginning of the year, right? But they're ramping it up big time because they're seeing very good engagement so far, and they're going to continue to ramp it up over the next few years. So we have basically a promise from the executives saying there was a slowdown in the business. We are leaning into this, and we're increasing CapEx. So we're investing back into the business during a slowdown, and we're looking at a turnaround over the next 1 to maybe 3 years, at the long end, right? All right. So let's say that's a big promise, right? Let's see, Zuck. You know, we don't really trust Zuck. Maybe you pull it off, maybe you don't, right? So let's look at the long term. Now, the last time they had a bit of a slowdown in the business was in 2019. As you can, I'm sorry, quarter over quarter. Let me look at that. Okay. I don't know why it has this locked change year over year. Okay, so March 31st, 2021 from 2020. I might use ROIC.ai. That will show more. But we had a bit of a slowdown there. Let me just skip to ROIC.ai to show me more. Meta waiting. A lot of people using ROIC.ai now. Okay, there we go. Yeah, this website's busy. Do we have the waiting music from the Reddit talks? Maybe everybody's looking at Meta right now. So basically, okay. What I'm getting at is we still can't see quarterly. Oh, there we go. Oh, nope. Well, maybe I'll support them, but not in a live stream. Okay, so we did have a slowdown quarter over quarter. I believe is in 2018, and then another one in 2021. When that happened, look at 2018. Big increase in CapEx, and then again in 2019. 2020 was a bit of an outlier because of everything that's going on during COVID, right? So pretend that this 53 billion was much lower. So if you look at 2018, 2019, that was really high CapEx compared to the last couple years. So that was the last time the business had sort of a hiccup, a bit of a slowdown, right? They invested heavily into their own business and said, we're having a bit of a slowdown, but we're investing into the future to be better prepared for, whatever happens. Within a year, that quarter over quarter growth that slowed dramatically, they completely turned it around from 2018 to 2019. So we're not even including COVID, where, everybody did well, particularly social media sites, digital advertising, right? They just massive boom because of the stimulus. So we're discounting that. Not even at 2020, they had ridiculous growth in 2019. So all that investment paid off within a year. And they said it was going to it might take a few years. So they've done this before. They've had, some like slowdown scares in the past over quarterly growth. I think it was the last time was like 2015, maybe 2016, aside from 2018. So this has happened at least a few times in the past. They invested heavily back into the business, and then they came back stronger a year or two later. So the company has a history of doing this. You can say like social media is changing, Instagram's going down, blah, blah, blah. People have said that about Facebook in the past, and then they steal an idea and then they grow again, right? So whether they're stealing ideas or whatever it is they're doing, they are very good at turning the company around, at reverting back to good growth. So that's what you see if you look over the long term. If you look at their capital expenses over the long term, their free cash flow, every time there's a bit of a slowdown in the business, fast forward a year or two, and they're more than back on track. So I think Meta is, I'm not a fan of the business, but you don't have to be a fan of the business to like the stock price. So that's kind of where I sit on Meta. I know they've done it in the past. They've pulled it off before. Maybe it was all Zuck. Maybe it was a lot of his executives. He does have full control of the company, by the way. So I'm sure a lot of it was attributable to him, as freaky as he is. So I don't like the business, but the management has proven their ability to turn around the company when investors were scared before. So that's a story. Perhaps they really know what they're doing with this new debt that they're taking on. Even if they don't, they have so much cash. They have so much cushion. This company is so highly liquid, so much cash flow. their current ratio is really good. Their debt really isn't that high. It's more than covered by their EBITDA, by even their free cash flow. 1 year of free cash flow pays off all of their debt. There aren't a lot of companies that can say that. There really aren't. And I'm not including the SPACs that just got fat paychecks from investors. That doesn't count. So perhaps a lot of bearish arguments to be made on the business. Government hates them. A lot of their users hate them, but the users keep using the platforms. They have WeChat. They're looking to monetize that now. But the way I see it is, I don't even have to take a deep dive into the business to know that historically Meta has done a pretty damn good job of managing through economic downturns, through slowdowns in the business. So the financials look really strong, really, really strong. The valuation looks very nice, and I'm a value investor, so I'm buying Meta. I'm already loaded up on Meta, so yeah. But that's just my theory. It's my thesis. Who knows? Maybe it'll just keep falling. Nobody knows.
I was talking more in a way like maybe they're stalking on the money, like Goldman Sachs did before the financial crisis, so they can get the companies for cheap, so they can get the money to buy them.
Yeah, maybe.
Or they buy back the shares. I think there's the two only options, maybe.
Well, they
don't
make
need
a
the
lot
money
of
anyway.
they make a lot of small acquisitions.
Yeah, they just
Apple,
bought a company
Google,
today.
Microsoft. Yeah. So
Yeah,
they
they
could
just
be
bought a
doing
company
that.
today in Berlin.
Right, but I wouldn't count on them buying, like, say, like a social media company, because international governments are already down their throats. So I wouldn't speculate on the acquisition side. Like, say the markets crash, and all prices come down. I wouldn't say, okay, they're going to buy a really, really good, publicly traded company, something like that. They'll probably continue their
Gold mine.
acquisition spree, but yeah, they're going to have to be careful with what they acquire for sure.
So it really is strange, like why they're getting additional 10 billion with all the money they have, if it's not for the acquisition.
I wouldn't be surprised if they started ramping up the share repurchases. Maybe they pay a dividend. Honestly, I think value investors would like it if they paid a dividend.
I think those are the two only options. Maybe I don't think the dividend one, but like share buyback or the additional acquisition in some unknown space. Maybe they buy, like you said, a company that makes servers. Maybe they do like Amazon did, and go into the server business.
Well, they're
that wouldn't be
investing in their own, so that would kind of be surprising if they did that. But yeah. What's up? Who said that? Well, anyways,
Meta is competing with Marvel for server building assets.
Oh, interesting. Yeah, Disney.
Maybe it is a server company they buy. It would be really awesome.
Yeah, maybe. But either way, like, my overall point is, I trust in the business based on the long-term history. Whatever they do with it, whether it's more share repurchases, whether it's acquisitions. Yeah.
Optimize it. But so I'm talking from a friend's experience. He worked for a small company that was they contracted for Marvel on Facebook products, and then when Marvel found out that Facebook was trying to buy them, Marvel bought them first.
Oh, very nice. I mean, they could totally probably outbid any company at this point, including Disney. Yeah. But honestly, I don't really like. I'll understand the business, but a lot of like the nuances, like what are, what are they gonna do with this debt specifically, right? Like for over the next year.
No, we're just guessing. We're just guessing.
Yeah. So I don't really like. I don't spend too much time guessing. Yeah, it's so. I'd rather personally, and I talk with one of my friends. He's got a PhD in economics, and we talk quite a bit. About investing and stuff like that. Take a good look at stocks, and we're kind of the same. It's like, let's get down the fundamentals at maybe a fairly high level. Let's dive into financials and the valuation, and then we're done. And then we move on to the next company. because we want to find more opportunities.
All right, Max.
Meta has the new headset coming out in a month.
Oh yeah.
That's also going to sell like crazy. I think with this new one,
I hope so for their sake.
It's going to be more sold than Xbox in general.
Maybe,
they really are dominating the VR market.
Yeah, but well, yeah, I don't know. I guess we'll see. We'll see what happens with Meta. I'm not in love with this stock. It's not like my favorite stock ever, but I do think it's trading at a good value. And probably plenty of other value investors, maybe in the big guys, I think they like it too, maybe. I think some of the value investors are buying Meta. Some of the well-known ones, but...
Whoever is speaking, we can barely hear you.
What, me?
Barely.
Oh. Could you all hear me?
No. We can hear you. It's just that there's somebody else who's talking. You don't hear him.
No, I can't hear anybody talking. But
yeah,
that's okay.
Talking.
Yeah, that's okay. That's okay. But yeah, I think I'm gonna call it a day after talking about Meta. Talking about Meta is exhausting. I don't want to talk about Meta. I just want to buy the shares, and that's it. But yeah, I think we'll call it a day. Thanks everyone for joining. What's that? I think someone's trying to talk.
I said thank you for taking the time.
Oh yeah, thanks. Thank you. Can I talk about specific brand name mics? The Samsung Q2U is a good mic. I'm not sponsored by them, but that's the mic I have. So I encourage people that like to talk a lot online. Yeah, maybe I'll have to cut that part out later. I don't know how the hell that works, but yeah, if you want to continue talking, maybe get a good mic. It'll help everybody else listen to you, hear your thoughts as well. So that's it for today. Thanks everyone for joining. There's Bill Huang, and hopefully you'll see you in the next video, which should be live on YouTube. So to everybody else that's watching this, have a good weekend. Have a good week. See you in the next video. Cheers.
Have a nice weekend.
Have a great one.
Yep, you too.